Hello guys, welcome to day 3 of making $10,000 to $100,000. And this time on the third trade I took a trade on gold spot. Right about here you can see this was the trade, and the trade was about 1:4x to reward ratio, and the strategy was quite simple. After determining the bullish bias, if we can move on the 4-hour chart, we can clearly see that after the bullish breakup structure right about here, let me show you. After this breakup structure, what would we expect? We expect a pullback. So the pullback finished here. How did we determine that the pullback was finished? After the pullback, there was an internal breakup structure right about here. It was right along this line. When it was an internal breakup structure on bullish chart right about here. So after this bullish internal change of characters happened, we were now looking for longs until the pullback or the continuation of the bigger move. So if we get down on the 15-minute chart, where is it? Right about here. This was the internal change of character, and after that we let liquidity build up near the supply, which caused the breakup structure right about here. This was the high low that caused this breakup structure. So we waited for liquidity to build up above this supply zone. So the liquidity build up around here, and after that the price swept liquidity. This move swept liquidity and tapped into the supply, and then boom, it started to move upwards. If we go on more smaller time frame, like 5-minute or 1-minute chart, here you can see after it swept liquidity, then it formed another bullish change of character. This was the bearish trend on 1-minute time frame, and after it tapped into the supply, after the liquidity sweep, it started an internal breakup structure on 1-minute time frame right about here. Let me show you. This was the internal change of character. So after that, what would we expect? We expect to this higher low or this strong low to hold and continue moving upwards. Breakup structure, pullback, breakup structure, pullback, breakup structure. This didn't cause the breakup structure, but around this point it started to cause the breakup structure. So on discretion value, I entered the trade around here when the stop loss below this low, and I waited, and after some times, there you go, the trade played out nicely right around here. This was the past trade, but on today's event, you can see that on 4-hour phase, we're on the pullback phase. On 4-hour time frame, where are the sell side liquidity? Why do we require the sell side liquidity? Well, if we want this high to break, so the institutions would want to enter around here. And to enter around here, they need opposing liquidity. So this low contains enough sell side liquidity right about here, and this low that formed also contains sell side liquidity. What is sell side liquidity? when this low was formed, so after price retraced to this point, many people would think that price might reverse in this area, so they tend to buy just like this. Wait, let me show you. If I were to buy around after this candle close, so where would be my stop loss? My stop loss would be around this level, the below this low, and my take profit would be around this area. Wait. Around this area. This might be my take profit area. But as you can see that I have put my stop loss on this level, right? So institutions will try to get in this area, sweep this liquidity, this bunch of sell orders, and on a long position, the sell order, if the stop loss order is triggered, then what is it actually? It says that I'm gonna sell my positions on this price. So if the institutions want to enter the market, there should be enough liquidity or enough persons or enough orders that can be sold to them so that they can buy against. Understood? I hope it's clear. So what I'm planning that price will likely to sweep these sell side liquidity before moving to take out this high, this weak high or high, you can say this high. They will need enough liquidity, and they're forming that liquidity above this support zone. Where's the support that caused the breakup structure? This is the support zone that caused, or this is the zone that caused the breakup structure. According to my strategy, if liquidity is formed above a supply or demand zone, then it's likely that the price, before moving up, it will likely to sweep the liquidity and move on the desired direction. So here you can see, if I go on a lower time frame, here you can see on a lower time frame the pullback is looking like almost a trend, but you can see that this supply zone that caused this breakup structure, internal breakup structure right above here, bearish high boss, this supply zone. So I predicted around this point that price might sweep these buy side liquidity and tap into this zone, and they have enough fuel to make the price to come down here after sweeping this buy side liquidity, which are formed during the bearish movement of the market. So the sweep of liquidity is happening right now, and I'm waiting for the market to open on Sunday and hope to retrace around this level to move the price around this area of support, so that it will sweep the liquidity and move into the support, and then boom, just like this one. Wait, let me show you. Right around here it will touch this support zone, and then it will cause this kind of bear structure. It will retrace to this support zone, and there you go, boom. And we are hoping to take out the previous high as well. So as I'm seeing currently the market is playing, let's see, it's a probability game, right boys? So I'm gonna put a limit order around this level, so that I don't miss the trade. And I'm kind of sure that this is a high probability setup, because the sweep, where did the sweep happen? The sweep happened on this area. This is where the sweep happened. So the sweep already happened, price broke a structure, and it is hitting the support zone. But I'm gonna put a limit sell order around right around here, right around this area. Sell right around this area, and the target will be this support before the pullback happens. So I'm gonna exit my position before the pullback happens, and the stop loss will be around this fair value gap or above this high. Remember, the stop loss is that point where your analysis or your calculations are proven invalid. So I'm taking as many as the stop loss is possible, as small as possible. So you can see that the trade I'm taking, it's a pretty good trade, because I'm hoping to target the liquidity rested below here. And just out of cautionary or out of safety reasons, I'm just placing my stop loss just above that liquidity. So you can see I got a good trade possibility. I'll update on the trade after it plays out and after the market opens. So you can see that the trade almost has wait. It's got a 1:7 risk to reward ratio, and I'm hoping it would work out. So let's wait for the market to react, and let's wait for the trade to play out. This is going to be the next trade I'm taking. And if you like more contents like this, live chart analysis and trade playouts, follow for more and subscribe, so that if you don't miss on the journey of my $10,000 to $100,000 challenge. See you on the next video, guys. Like, share and comment if you like the concepts, and if you want any detailed videos about my strategy and how do I do it and how do I analysis my market, so drop a like or comments on the comment section. I will upload another full strategy review video if you want it, of course. So if you guys don't want it, then I'm not gonna publish my strategy publicly, so it's okay. See you on the next one, guys. Peace out until then. Ta-da.